To start off talking about the assassination of this Iranian official in Baghdad. Markets are down today, but the response is fairly muted. Oil stocks predictably move up. This typically happens. There's concern there might be some kind of disruption in the oil supplies. That's not clear, but I can tell you this is a lot different than it would have been 10, 15 years ago and certainly 20 years ago. So you get oil stocks like British Petroleum up 1 or 2%. That's pretty modest. If this would have been 15 years ago, those stocks would have been up maybe 10%. Why is this not such a strong reaction? Why is it so muted? Well, because global oil supplies have become much more spread out. And the United States is itself a major supplier. In fact, it is the #1 supplier of oil in the world now, surpassing Saudi Arabia. So you have more diverse supplies of oil. Back in the 1970s, most of you probably don't remember this, but we had an enormous oil shock in 1974 and 1975 when a limited number of countries that controlled oil production decided to play some games around oil production and caused major disruption in the U.S. economy. That's not really happening as much anymore, and globally diversified energy sources are the main source of that. Hannah, what else do we want to talk about?
All right. What impact does the Santa Claus rally have on the stock market the rest of the year?
The Santa Claus rally, what impact would it have on the stock market for the rest of the year? The Santa Claus rally is a very limited phenomenon. It is the tendency for stocks to rise in the last 5 trading days of the old year and the first 2 trading days of this year. So this is ending today. The historic tendency is the market tends to rise going into the new year, up about 1.3% on the S&P. We are up, but not that much this year. So the Santa Claus rally is up maybe 0.5%. More interesting is not Santa Claus. More interesting is the January effect. As goes January, so goes the year. This actually has a pretty good track record, and that's kind of something you should pay more attention to. We're not quite sure why this works. The theory is that a lot of people tend to go out in the beginning of January, lighten up on some of the big winners that they had last year and buy some of the losers. This is definitely happening, for example, in oil stocks. Oil had a terrible year generally and had for several years, energy stocks, but have been doing well recently in the last couple of weeks as people try to buy stocks that have been so dramatically beaten up that it's hard to believe they'll go down much more. Remember, it's buy low, sell high. We don't know if this is going to happen, but there is a tendency towards mean reversion. This is a very well-studied phenomenon, and all it means is stuff that gets run up really heavily tends to get overly run up, overbought, too much momentum. People tend to buy the same stuff over and over because they think the future is always going to look like the past, but it doesn't. This is one of the great fallacies of investing and life in general. The future does not look like the past. So stocks that have been running up for long periods of time eventually tend to fall back a little bit. That may include Apple someday, although last year was not that year for Apple. So we'll see what happens. But this process of picking losers from last year for January is a very well-studied phenomenon. By the way, it exists over many years, too. Decades it exists. So, for example, in the 1990s, technology stocks did really well. Energy did really poorly. The opposite happened in the next decade. In the 2000s, technology stocks did terrible and energy stocks did really well. And then the whole thing flipped around again into 2010s when we saw technology stocks doing really well again and energy doing awful. You see, these things tend to go in cycles. And again, one reason is because people tend to buy the winners for too long. They get overbought and eventually they come back in. And then for the losers, remember, in capitalism, it's a very ruthless structure. Companies that are underperforming or sectors that are underperforming tend to get ruthlessly restructured until they're more efficient. And this is an aspect of capitalism. What else, Anna?
All right. How is impeachment affecting the market?
How is impeachment affecting the market? The short answer is it's not. It's not right now. The market is betting that the chances that, well, President Trump was impeached in the House of Representatives, a conviction in the Senate is extremely unlikely. And that is still the betting of the market. If the odds of that went up, that may start to affect the markets somewhat. Highly debatable. Right now, I can just say it's not an issue, and let's just leave it at that.
All right. What IPOs can we look forward to in 2020?
IPOs in 2020. I am not as excited about the IPO market as I was at this time last year. Now, in 2019, we had a government shutdown going on, and it was a little more of an issue, but there was a lot of excitement about Uber and other names. I would say the IPO market in 2019 did well, but not amazing. there was some hope we were going to get $100 billion in IPOs coming. That didn't happen. We got a little north of $60 billion, and some successes and some notable failures like Uber and Lyft that did not perform very well. Obviously, the big one in 2020 potentially is Airbnb. There are other ones out there, for example, Postmates potentially, some food delivery companies potentially that are out there, Casper. Another one that I think is really interesting, but to me would be most interesting, would be Ant Financial. That's sort of the mobile payments arm for Alibaba over in China. It's hard to describe how big these guys are. Alibaba has 600 million users in China. I mean, think about this. There's 330 million people in the United States. Alibaba has 600 million users in China. Ant Financial is the mobile payments arm. If that goes public, that would be a big, big deal. Now, Alibaba lists here right behind me, trades right here. But it also, this year, had a secondary listing in Hong Kong. So there's some question about where Ant Financial, if it went public in 2020, might list. But that's one I'd very much keep an eye on. What else?
What might 2020 bring for thematic ETFs?
Thematic ETFs, or exchange-traded funds, what might... You know, the big thing that happened last year was what we call ESG, environmental, social, and governance. Now, people have been interested in these kinds of issues for a long time. Environmental, you know, how corporations affect the environment, social issues and governance issues, things like hiring women and looking at your boards in a different way and who runs the boards in a different way. These issues are been percolating up for a number of years, but 2019 was the year when these ESG, environmental, social, and governance issues really came to the fore. And it's for the first time we saw real notable inflows into ETFs that buy stocks based on indexes evaluating how well companies perform against these environmental, social, and governance issues. In other words, not buying stocks just